Our next guest is almost in the same camp as JPM, saying the risk of recession is above 50%. And with stocks under pressure for the second day in a row, let's bring in Charlie Babrinskoy, the vice chair at Ariel Investments. Charlie, you've got a long experience in the markets. You're supposed to be telling us to buy at times like this, right?
As a long-term investor, I'm going to say we should hold at these times. This is what long-term investors do. They don't panic when times are down. They don't sell when stocks are lower. But if you need your money in the stock that you have in stocks and you're going to need it in the next 6 to 12 months, I would advise caution. This is not just the market having a panic. This is bad policy having bad effects. The stock market is all about things happening versus expectations. And the expectations were that we would get an administration that was very pro-business, that would be good for the market, lower taxes, lower regulation, more approved mergers. Instead, we're getting some policies that are extremely bad for business. And that, in my opinion, is why we haven't justified sell-off of the market. So
are you juggling things around, Charlie, in the portfolio?
I haven't made a lot of moves because the news is fully reflected in stocks. And so the names that are going to be hurt by tariffs are being hit hard. I will say the area that's been, in my opinion, hit probably a little too hard are regional banks and even some larger banks. Banks obviously aren't importing products that are going to be tariffed. Banks would be hurt by problems in credit, and we're not seeing that yet. So names like Bank of America and Bank of Oklahoma that have traded down in a big way, I am more positive about. There are some names in healthcare that have been hit very hard because of what Cabinet Secretary Kennedy has proposed. And so maybe some of those healthcare names are oversold. But I don't want to minimize what's going on here. Tariffs are, in this kind of tariff, very bad policy. They're going to have a real effect on the economy.
You know what's so fascinating, Charlie, is the amount of retail buying that we're seeing. Did you hear those data points earlier? Big retail volumes buying into this market sell-off yesterday. What do you think that's about? And the retail, by the way, going back now to the pandemic, they've kind of been the smart money, right? They were buying in the March 2020 lows. We don't have to get into the Momo stocks and whether those have always worked out so well. But what do you make of this discrepancy where we have, it seems, retail buying into the sell-off while pretty much every investment pro economist we talk to is pretty bearish?
Yeah, I think the retail investor has been taught to buy the dip. Look, if you bought stocks on dips anytime over the last 15 years, you've done very well. And so I support that basic instinct. That's better than the opposite, where people would panic and sell on the way down. But I do just want to stress that this is not a temporary phenomenon. If we're going to have less globalization, if we're going to have tariffs, significant tariffs, that's going to be bad for the economy for a while. And so I don't want people to think this is just the market having an emotional reaction. These are bad policies. And now we still all have the same hope, which is that Mr. Trump will be able to recognize some victories. He'll be able to get some major company to drop some major country to drop their tariffs, and he will announce a victory. That can still happen, but this is worse, much worse than any of us thought.
So even companies like NVIDIA, right? You say for all that's happening, the AI boom, the AI innovation cycle is clearly going to be moving forward. Those shares are, I think, 30% off their highs. They're below 100 now. Is there a level at which they or an Amazon or some of these other almost defensive, stapley kinds of big tech investments make more sense to you to get involved here?
And I'm glad you brought those names up because there were names going into this that were overpriced. The Magnificent Seven, everybody's talked about, it's not an original thought from me, were overpriced. And so some of them have just now gone into correction. But what I'm more focused on is the names that were reasonably priced before this all happened and have now been hit almost as hard. They haven't been hit quite as hard. But you have to be careful about that. I would say some of the names like NVIDIA, some of the AI stories are coming back down to earth because the companies won't be able to spend in CapEx to advance their AI strategies in a recession the way they would if the economy was going on all cylinders.